Hello traders and welcome to another video review. Today is Wednesday, February 14th, 2024. Let's find out what's going on the economic calendar today. As you can see, there is some nice data scheduled for release. Let's choose the most important one to see which one are really important on the calendar, and let's switch to the medium ones as well. So, CPI data from the UK had been published already, and it looks like this data is exactly the same as the previous one, but it was then forecast as 4.1%. So we'll definitely take a look at the British pound. PPI input deteriorates even further from minus 0.4 to minus 0.8, completely surprising the expectations of 0.1%. The speech from the ECB, the Guindos, will take place at 9:30, and Eurozone GDP, industrial production data, all of them are scheduled for this at 11 o'clock. The market participants expect the GDP to increase from 0% to 0.1%. At 4 o'clock, we got the speech from the Governor Bailey. Then, key event of today, crude oil inventories scheduled for release at 4:30, together with Cushing crude oil inventories. And that's about it for today's calendar. Because of the CPI data, let's just switch to the British pound. As you can see, the British pound has hit the 61% of the Fibonacci retracement, and it hit the golden trend line. Let me just zoom out for you to catch this golden trend line. Very nice reversal out of the golden trend line. So we got big bearish engulfing. We can even copy our label here for the bearish engulfing. And that's it. The local high was made at 1.2691. The Fibonacci will not be used anymore. We can get rid of it. And we of course broke below this short-term trend line support as well. The blue one. This is the one I'm having in mind. And we can add one more line here towards the level of 1.26. 2692. So this is the swing high for the bearish engulfing candle. Momentum is now negative 39 points only. And where we are heading? Well, it looks like we are heading towards the level. Let me just take a look why this line is lower. Okay, that's why this line is lower. Let me just remove this line and give you guys correct levels. So we are going towards 1.2517. This is the next technical support. There you go. It is green, and then we got the technical support at 1.2501. Nevertheless, if you take a look here, you can see that the overall structure of the supports is a little bit different, because the key short-term support is still located lower. Is located between 1.20 450, 1.2426. So as you can see, we still have some room to the downside before this level is apparently hit. So let me just move this key level support label, so we all know that this is the place we are looking for the key support. Now, momentum is negative. We should expect more downside. As you can see, this is the one of the intraday technical supports, 1.2570. It was violated already, so we are trading below the intraday technical support. More downside is expected on the British pound, and it looks like the bears are in charge of the market. Let's switch to the euro dollar, because there is interesting developments there. As we mentioned before, this channel here, you can see the blue one, was a corrective channel, and the market moved out of the corrective channel very rapidly after the data were presented. Big spike to the downside. So now we can place red horizontal line at the level of 1.0806, which will act as the technical resistance. Big reversal to the downside, and of course we are trading below the key demand zone. Now all of these levels on the demand zone will be changed to the red, of course. So as you can see, there is no more demand zone. We don't need this line anymore because it was violated, so bears cannot be stopped. All of these levels will now act as the resistance. As you can see, they already worked very nicely. The level is 1.0723, and we should extend the drop even lower. We should extend the drop towards the level of 1.0695 and then 1.0676, 1.0670. So the outlook for the British pound remains bearish, because there are some data from the crude oil. Let's take a look what the oil is doing. We just analyzed this market yesterday, pointing out this black trend line, short-term trend line, and very steep ascent of the crude oil, even above the 77.34. Now, the local high was made a little bit higher, so we got the level of 78.47. And we are, of course, getting towards the swing high from the 29th of the January, located at 79.25. Momentum is super bullish. Momentum is strong, is positive. And should we see this level hit, then it all depends what will be the market reaction on this level. Most likely, we are going to break higher, because it looks like just recently we've done this low here at the 67.71, and then this movement here, it looks like the higher high and the set of the higher lows. So the overall outlook for the crude oil remains bullish whatsoever. And last but not least, let's take a look at the US dollar index. And we can clearly see that the US dollar index is bullish. When we switch to the daily time frame chart, we can see the recent breakout to the upside, and breakout above the level of 104.57, which means generally the next target for the bulls is a technical resistance located slightly above 104.82. Now we are testing it. Okay, that's fine. And then if we pass this level, there is another one located roughly around 105.98. So this is the next target for the US dollar index. Momentum is strong, momentum is positive. It looks all very good for the bulls. However, we just possibly entered the extremely overbought market conditions, so some kind of a pullback must be expected anytime soon. Otherwise, US dollar is gaining across the board. Euro dollar is going down, pound is going down. So it looks like the S&P 500 should do some kind of a pullback as well. That's the situation on the technical side of the markets. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.